Very well. Now, Malaysia continues to register full employment during the month of May, notwithstanding the reduced labour force participation rate. Hi, and thank you for tuning into the weekly review with me, Siti Norapsa Juswar. So, analysts said that total labour force stood at 12.89 million, while the participation rate slipped to 65% during the month. So, weekly review had a chat with TA Securities Economist Research, Patricia Oh Swee Ling, to talk more on Malaysia's hale and hearty labour market conditions. Hi, welcome to another edition of the weekly review with me, Siti Norapsa Juswar. Alright, now talking about the Malaysian economy, hale and hearty labour market condition right now in Malaysia. Is it really strong enough to actually venture out to the international market? With me here is Patricia Oh Swee Ling, Economist Research at TA Securities Holdings Sdn Bhd. Hi Patricia, welcome to the show and thank you for having us in your busy schedule. Okay, so now the Malaysian unemployment rate is fairly low, about like 3.1%. So as to compare to the European countries, about like 11%. Are we really, should we be really concerned about this one? Is it really going to be increased in the future?
We have been looking at the labour market condition to taper off during this fiscal year, in tandem with all the uncertainties seen in the Eurozone and also the turmoil that we face due to the slowdown in terms of economic growth. Meanwhile, unemployment had been trending at a full employment level of below 4% to date, and that is basically noting that Malaysia had been on the phase of hiring despite the slow economic performance for this year. The anticipated growth for this year is expected to be lower than last year due to all the uncertainties and also that trade had been tapering downwards. But we do see that unemployment remains at a steady level at this juncture, and with that we do expect the overall labour market condition to remain healthy and sustainable for the rest of this year, despite all the ongoing uncertainties at this juncture.
I see. So what do you mean by being in like healthy? Maybe people are getting more jobs or something?
Well, the labour force had in fact not been as strong as last year. Participation rate had also tapered down, but again note that there had been increase in terms of hiring in the manufacturing front in particular, where we've noted some hiring seen in the manufacturing segment of the economy, which had been quite slow during the past year, and the pickup in terms of overall hiring the manufacturing could indicatively indicate that there is still domestic spending and there is still demand for manufactured goods, hence the hiring in the manufacturing segment, and thus overall hiring could also indicate that there is still room for growth for Malaysia despite all this uncertainties at this juncture.
Right. So when you say that for the manufacturing segment only, how about the other segments?
Particularly, we noted some improvement in the manufacturing sector. There is indication that there had been a gradual slowdown in most of the other industries at this point, including the E&E. The rebound of the overall E&E segment, particularly where we've been looking at a slow growth for the E&E division, which is quite threatening in fact due to the extensive demand for E&E and also the exports of E&E. That's our largest.
How excessive is the threat, isn't it?
It was in fact during the first few months of this year. It came off a bit in April, but the numbers has not been really promising at this juncture, and exports growth for the E&E hasn't actually rebounded to pre-crisis or the last year's high. So that is in fact an indication that we could still be facing some turbulence despite the local or domestic strong fundamentals at this juncture.
Why is it so? Because I must say we are actually getting stronger in domestic demands, but isn't that the case of factors from outside factors such as the EU crisis?
We believe that could be partly in part due to the EU crisis at this juncture. we do export extensively to the EU. Our E&E products to the EU had not been as strong or as resilient as what it was. In fact, it had been tapering, or it had seen a contraction for the past 6 to 8 months. So that is probably a signal that E&E recovery would pose beneficial for our domestic exports. But at this juncture, we do see that demand for products or manufactured goods are channeled mainly on the domestic front rather than exports. So impact from the EU crisis, yes, we are facing. We are definitely having the contagion-led effect. While there are other positive signals, probably in terms of investments, carry trades, and all the other factors directing towards the domestic demand or domestic growth at this point. But note that we have been a trade-oriented economies in the past in the past years, and we rely heavily on exports. So with the slowdown in terms of exports to the EU, that's definitely going to affect us in some way or another.
Right, I see. So when you say that we Malaysia is actually relying more on exports, so are we getting, are we going to be a producer to the world per se in the next, like for example, 8 years maybe?
In terms of producer to the world, I think that would also rely heavily on as to whether China sees that sort of a boom. And yes, we have been looking at China's economy or the expansion in China producing towards global growth and also global demand at this point. Well, we have been recording steady growth, and GDP has been quite resilient through to last year. This year onwards, I think we'll be facing some turbulence, or we'll be facing some setbacks in terms of growth, in fact, due to the overall trade that is likely to taper down. So production level towards to support overall global demand would hence also depend on some of these external factors, including the EU rebound in the EU, and as to whether China can sustain that sort of growth at this point, because we export extensively to China as well. So yeah, at this, I think what we would probably be looking at for the rest of this year, it's mainly the domestic growth or domestic expansion to be the driver of national growth for 2012. Next year remains quite blurry at this juncture. We would definitely be expecting some conclusive policy in terms of monetary and fiscal in the EU in order for us to be looking at more prospective growth going forward.
True that. So per se, in the crisis remains in the EU crisis, and we are actually susceptible of the crisis, but really, should we be complacent on it? I mean, Malaysia export as our stronghold, and holding on domestic demand alone isn't really enough, right? So what should we do more?
Basically, there are initiatives at hand. I think what we are probably backing on at this point is really domestic growth, and in part domestic demand, which include the consumption spending of the public, and also not to mention the private driven initiative through the ETP projects that's expected to be its driver of growth for the rest of this year, particularly in terms of investment spending by the private sector and backed also by the public segment of the economy. So what will we be expecting going forward into the rest of this year would mainly be in terms of domestic expansion, domestic demand growth, rather than external factors coming from the exports oriented segments of the economy. Like I mentioned earlier, while exports had been the main one of the main contributors towards growth, 120% out of GDP growth for the past year, it had been tapering down this year, and trade surplus had also been narrowing, and that is an indication that we would not be looking at that strong demand in terms of exports going forward, while imports had been quite strong, mainly partly due to the replenishment of inventories and also the low productivity level during the start of this year.
Excuse me, but what are the countries that are currently contributing a lot in the import section for Malaysia?
Which other
Which other countries?
Our direction of trades are quite bilateral in that sense, because while we export extensively to some of these countries, including China, US, Singapore. Singapore is one of our major trading partners. Thailand and some of the other ASEAN countries. We also import.
Right.
So while there's exports, there's also imports. So at the end of the day, it's as to whether we tend to export more or tend to import more. So which is why I say that bilateral trading with the Asian economies is quite it's quite high in fact.
Quite high.
But what is interesting at this point is that we have already been shifting gears towards regional trade. Or regional trade, rather than depending a lot on the EU and just the US as what it was in the past.
We cannot really depend on them, because their economy actually depended on us.
Yeah, that's true. And that shift is quite interesting, because now that the US has not been showing a sustainable growth pace,
are they looking at China right now to
be the support of growth? It has been the support of growth last year, in fact, and that had been one of our contributors towards our overall growth domestically. But as to whether China can still maintain extensive growth of over 10%, 8%, it's quite a question at this point. The premier, I think, China's premier is now looking at the growth of just 7.5 for this year, and if
but
and
before this, they're growing about like double digits.
They used to, and they used to, that's right. And it's coming down. It's coming down. Growth pace has not been very resilient in the first quarter of this year. It only came in at 7.6%, and they are looking at the growth narrowing for the 7.6 was for second quarter, correct. So overall, it's actually tapering down. So as to whether that could be an overall support like what we saw last year remains a question. Yeah.
So, but the thing is, for investors, they want to know more. What or which country should I invest in right now? I mean, Malaysia is doing okay, domestic demands, okay, whatever maybe people say. So for an investor, which countries do you recommend them to actually go invest to, diversify their portfolio per se?
If you look at the recovery ever since the 2009 recession, whereby Malaysia slipped by about 1.7% during the year, and following that recovery, we have been receiving, or we have been directing a lot of inflows of carry trades into the region. That includes carry trades into Malaysia. The short-term flows of investments has increased quite substantially, and following the EU crisis and the outspark of all the sovereign debt issue in the Eurozone, that had in fact been driving investments out of the region and into safe haven, including JPY, the Japanese yen, and also the greenback. So, but again, if we do expect to see the Asian economies to remain firm or to see growth for the rest of this year and also going forward into the following fiscal year, I believe that there could be a reversal of trade eventually, because now people are just holding back and safe haven. So the prospect of growth within the Asian boundaries is still promising at this juncture, while growth could slow down going forward. But we would still be registering growth, and we would still be expecting to channel investments into the region, and that includes investment into Malaysia as well. Good economies or strong growing economies remain China, India, Australia. Indonesia remains a strong growth economies at this point. Malaysia is not too far off. We registered about 4.7% in the first quarter, and that's quite impressive, in fact, considering all the uncertainties. We do expect some moderation in terms of growth, but overall we are still looking at a strong 4.6% for the full year of 2012.
That's not bad at all.
That's not too bad.
Yeah. So before we end our session, do you have anything more to add on the Malaysian economy? Maybe your projections for the next year, maybe for the Malaysian economy.
For 2013, normally by now we should already have, a sort of like our outlook in terms of what our projections are. But this, I would honestly and be frank with you, this is one time where it's quite tricky in that sense, because we are waiting. Most of us are just putting a wait and see approach at this juncture to see, and I think we are backing a lot on all the policies implementation in the EU. We are looking at also the trades, whether we could in fact see a sustainable rebound, because things are really uncertain at this juncture. But for next year, at this point, I think government had guided that we will be looking at growth between 5 to 6% through to 2020, and I think if it does come in within that range,
it's
probably
very reachable.
I believe it will eventually be able to grow at a pace. Yes, this year we'll be looking below 5%, but in the maybe for the average of 20 through to 2012, we will still be looking at between 5 to 6%. My growth projection for 2013 at this juncture would be at about 5% only, nothing more than that. Yeah, I'm quite conservative. More on the conservative end.
More realistic.
Yeah. And that is also given the fact that we are looking at domestic growth to be firm, demand to remain resilient domestically, while exports are to still be a bit shaky for through to 2030.
I see. Okay, there you go. That was Patricia Oh Swee Ling, Economist Research at TA Securities Holdings Berhad. My name is Siti Robsa Juswa. Thank you for watching a weekly review on this segment. See you again, same time, same place. Bye. Have a nice day. Well, to date, unemployment rate stands at an average of 3%. As such, Patricia further adds that the outlook on the labour market for Malaysia remains unchanged despite the global volatilities at hand. So will that put things in order, or it's a question that everyone wants to answer to? Don't switch that channel just yet. We'll be right back after these messages. Stay tuned.